All right, everyone. Here we are with ticker symbol JMIA, Jumia Technologies. And before we go ahead and jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. And one of the simplest and best ways to say thank you if you don't have time to comment, because I completely understand if you're doing research and you're trying to get to the next video or the next information about this stock or other stocks that you're interested in investing in or invested in. I wanted to just state, if you can click on that like button to let me know you watched this video and found it helpful and informative, please do so. And it's one of the quickest ways by a click of a button to say thank you for the information. But let's jump into this chart. So Jumia had actually had a run. It slightly broke through the 50-day moving average. It broke through resistance and it only lasted for 30 minutes. After that, it dipped, hit new lows here of about 1620. Super important number, keep that in mind. I would tell you to write that down. Then it slightly rose back up, and right now it's having a tug of war to stay over the 50-day moving average or go below it. The 50-day moving average is 720. We're slightly below it at 1715 right now. So 1720 is super important to keep that in mind. Now, up here at 1790, that's another important resistance level for the days to come. So keep that number in mind, write it down just to see how this stock is behaving and where it's going. But let's move this to its new locations and see what we want to pay close attention to for the next coming day. So I'm going to talk about the support here of the lowest point before the bullish run and the highest point in that bullish run, which happened within the same hour, and then it leveled off. So we're currently below the 50-day moving average by 5 cents, and that is important right now because the tug of war will be interesting tomorrow. For the bulls to recover and bring this back up and cross the 50-day moving average and pull further away from it, they need to break through the resistance of 1756, turn that into a support, and pull away to newer highs and newer resistance levels. If the bulls can accomplish that, they will be pulling further away from the 50-day moving average and a newer high and a newer resistance level. So super important for the bulls to accomplish that and go ahead and break away from it. But they need to turn 1756 into a support so that that can be done. On the other hand, we have what the bears want. The bears want to break through support, pull this further away from the 50-day moving average from where they're currently at. They just got into bearish territory and they're going to want to pull this away from it and break through support levels. Now, there are a few support levels in between, but they're too early to actually pay close attention to because the bulls and the bears could be having a tug of war up here. But if it pulls down this far, this is a confirmation that the bears are starting to gain leverage. I'm not saying that the bears have completely took over the chart if it gets this far down, and it's confirmation that the bears are just going to continue to pull this down. But it does show that they've gained more leverage, and it's confirming that the bears have been able to pull this further away from the 50-day moving average significantly to break through support and hit newer lows and new support levels. And that support level is 1636. If the bears accomplish this, pay very close attention to how this stock is reacting and how quickly it is hitting newer lows. All right, I hope that with these cues you guys are ready for tomorrow's trading day. And as always, if you feel encouraged or inclined to subscribe, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.